A lot of the insights you've shared in the morning session had to do with the industry, where we were going, and now I think it's really exciting that we'll talk a bit more about you and payabl and the story. So you're a Cyprus-based company and a unicorn, but not in the sense that most of us think about a unicorn. So why are you a unicorn?
I mean, it's interesting that we were giving this this name, and I think it kind of happened, accidentally. But we have to be, specific why. We actually don't call ourselves that, but we were called that after some recent discussions when we were talking to people around the industry. Is that the fact is that we don't have any external investment for growth. Meaning that the company, yes, is 13 years old, but we've grown completely organically. From the roots in Cyprus, and now operating all across Europe. We have offices in Germany, in UK, in the Netherlands, in Lithuania, and so on. So what makes it special, or what makes us special, because in the fintech space, there's a lot of talk about investment, and and you see people here and there raising money. And we are completely organically grown company. There is a term that is called sort of bootstrap, which I don't really like because we're nothing sort of that. We are engineering our growth very specifically and tailored, and we know what we do, and and how to manage the growth. So I think that's what probably makes us the unicorn. So thank you for that name.
What have some of the challenges been with bootstrapping over the past years?
I think the main challenge, maybe more perceived from the outside perspective, because as I mentioned, this industry is kind of very big on, who is big, who raise how much money, in which, directions, you are growing. So if you're not really doing that, and you're not so much, in the public eye, so a lot of the time that could be the challenging aspect in a way, as other companies get way more attention because of the fact that, they're raising money. Of course, they're also getting a lot of attention when things do go wrong. And when the money is not justified and the growth is not justified. But I would say that for us probably is the challenge, which we will also, cope with and decide, how to do it. But aside from that, of course, as I mentioned, requires, strategic engineering. You build a product, obviously, that you believe in, which is, perfectly fine. And of course, a business like ours requires a lot of investment from when it's starting. So of course, the shareholders, when they created, the company 13 years ago, they had to put, money down, to build all of that, up. And from the, payment side and sort of license payment, company side, of course, the investment is not small. You have to get, it takes a lot of time to get you off the ground. You have to have the right memberships, to get the right licensing. So actually, it is a challenge because you're ultimately, yes, you're building a product, but you're technically not even able to launch the product, even if you have it, because, you're waiting for all of the licenses and everything, to realize. So after that, if the product is obviously good, then the challenges lie, of course, how you distribute, where you focus, your growth, how you decide, which direction to go, what is important, and sort of this foresight of where the industry is going. So that is a challenge, and of course, when you're doing it on your own funds, so you're a little bit more careful, I would say. So that is also, I'm not trying to be rude in any way in the respect of the companies that do get the funds,
yeah,
but you do actually really realistically know how much money you need for certain things, and you're very careful and selective, how those funds are allocated.
Yeah. I mean, I suppose it keeps you kind of lean from day one, right?
Exactly. That is also a very important part. So, and also, it's the startup community is really fun, and I participate in a lot of events. Web Summit was recently one that that I attended. And there is a lot of focus on this kind of startups and how to but it's all very nice, and there's great business ideas around, but I'm a very pragmatical and practical person, and if you build something and the economics of the unit doesn't work out and you are not earning money for it and you don't know how to monetize it, then the product is flawed. Yeah. So that's my just humble opinion.
Yeah. So what advice would you have for anyone starting a business that is thinking about going down the bootstrapped route?
I think you still need to realize that that you need the initial investment. You cannot get away from that perspective. But also, I suppose you need to really know, okay, how long or how far that money will really last. So what can I do for the money that that I invest? And if you know that you don't have the initial capital required, then of course you have to structure it and understand, okay, at this point I will run out of money, I need to do this. But it also should be KPI based. So, what do I want to achieve? It shouldn't be that I just ran out of money, I hired a lot of people and then I don't know what to do with the people, and then just sort of counterintuitive looking for ways how to sustain the company. So I would say that what is really, really important is that you are responsible for what you're doing, because I have seen a lot of companies in the last years where it was, let's say that was not the key parameter, and I always feel very responsible for the people that I work with, for the people that I hire, for the clients that that we have. Yeah. And I think the ethical part of it is also very important. Even people don't talk about it. So also have that in mind. Can you sustain the business? Can you keep the people that you hire? Yeah. Right? Yeah. And if you know that in a certain point you will need to raise money, then be prepared for that. What is it? What will that entail? Right? So that it would not be left for last sort of minute call.
Yeah, absolutely. So. Born here in Cyprus, but operating internationally, can you talk us through kind of your international expansion journey?
So let's start from the fact that Cyprus is part of the EU. So it's our license obviously is transported to other European countries. And I'm with the company for 3.5 years when I took over as the group CEO for payabl. But the reason why the company was established here 13 years ago by the shareholders was because it was a favorable environment for a license, and the company was established. So technically, we could always operate across the border and across the border of other European countries, and that's what happened. But ultimately, when you grow, there are some obstacles that you will come to. Cyprus is a great place to be. Very small, so you have issues in terms of finding the right talent, growing in the right direction. If you say, okay, I want to target certain countries, there's language, and which again Cyprus is great because if you say, okay, from the English perspective, the language is there, and it is a big factor for companies also relocating to Cyprus because they can do the business in the majority of the time in English. So. But our expansion and drive stems from also the plan and the product development and also sort of the direction of the company, right? So let's say if we went to UK, it's because, we wanted to get an FCA license, so Financial Conduct Authority license, right? So we operate in UK because of that. So all of the expansion, I would say, outside of Cyprus is done according to the need. So again, it's kind of a very practical, approach. We have a large office in Germany. We always had. This is our tech and R&D office, which I know sounds very weird for a lot of the companies because when you would say that you have a tech or a product a company, they would not expect it to be in Germany, right? So a lot of the times you would expect maybe it's Bulgaria, maybe it's Poland or some other countries. It is kind of historical, but on the other side, I can justify that we have top talent in Germany, and actually we need less quantity of a team in a way. So when you have very experienced developers, for example, in this case, we can operate and we can coordinate our work without increasing our expenses actually to the point where it says, okay, this this doesn't work. So we always are cautious of what we're spending and where we're spending, and so the growth into other jurisdictions comes according to the need of the business. Business development is also a big part. So of course you also locate your people where you have a big client base or you're actually targeting a country. And it actually for us it changes from the type of the product that we're introducing. So for example, if we introduce now the POS terminal terminals, which is the physical, acquiring, machines in the shops. So we have a different strategy than the overall, product. So let's say maybe, the next country will be Greece, where we never had, presence before, but then we will go and set up, shop, in that country. But from the talent perspective, I think, and my advice, I suppose, for companies who are operating from Cyprus and have, the business need to have, companies, outside is what is the purpose of those companies, whether it's, marketing purpose, whether it's business development, whether it is R&D and development. And if you really lack those, talents, here, then of course it makes sense, to set up, the shop, elsewhere. Also, another point is to relocate to Cyprus, which our company is not doing. So we actually hire local talent here, and we're very proud of that. So slightly different strategy from other tech companies that are relocated in Cyprus.
Okay. What's the biggest challenge that you've faced with international expansion?
I will be very honest that the biggest challenge is always people. And I think everyone doesn't just talk enough about it, because, when you are going into different markets and different jurisdictions, you need people that you trust, and you need, people to do and to be, loyal, and to continue the growth of the company and the vision of the company. So I think that is usually the biggest challenge, because you need to find the right, talent and the right kind of, people to grow with you and to grow in those, countries and jurisdictions. But of course, also if you take and talk about, payment landscape is very complicated. If we say that, okay, we're operating in Europe, there's different rules. If you go to US, even from the card acquiring perspective, it's different, even though it's the same Visa and MasterCard and all of the other, card schemes. So when you operate globally, and we have operated globally, even being, in Cyprus, for many years, it means that, we have to accept, payments globally. We have to know, what is happening, around the world. We accept multiple payment options also, from Brazil, from Asia, So you have to know how to operate in the business that you do. And of course, there are many challenges. There's regulatory challenges. There's payment acceptance issues if, you're not located, in a local country. So there's really multiple, let's say, things that as a payment company, you have to worry about, when you're expanding.
No, I really like that advice and kind of your ethos of going into markets where there's a need, because I mean, I know in the B2C fintech space, we see a lot of, neobanks trying to crack Brazil, the US, new markets and everything, and it's, there's so many cultural nuances, regulatory nuances, payment nuances and everything, so I think that's solid.
No, look, it's you're right, and I think what you mentioned about going according to the need of the industry, because we don't deal with consumers directly, we deal with the B2B businesses. I think that is also in line with our organic growth strategy. So we don't go to a market just because everyone is going to the market. We go to the market because we have an inherent need. So it means that our clients need payment options there. Maybe we do see an opportunity and something that we can really fix. I think that's also the big difference. When you have an ultimately unlimited budget, then you're a little bit sort of all over the place, and you're not so focused. So our strategy always comes from the fact that, okay, what do our clients really need? But you cannot only follow the client's needs. You also have to forecast the future. You have to see where is the industry moving forward. So what do you see? How does a payment company look in 5, 10 years from now? Are we going to be that company? What kind of components we have to have in order to stay current, to be relevant, and also to service the needs. So I think this is a really big challenge, because you have to combine that, and sometimes you make educated guesses, or educated gamble as well, in the sense that something maybe will work out, something will not work out. But when you have always a current revenue stream. So we're kind of, secure in a way that, okay, we can experiment, with few things, here and there, because we know that, we can always fall back on the core services that we provide. But in my view, the payment company of tomorrow is a payment company that really provides for any financial need of the merchant or a client, that is service. And this embedded finance, aspect is completely, fully integrated into, even in the B2B space.
That's a great segment into the next question.
I was gonna say, I was thinking about it too.
Going back to one of my favorite topics, embedded finance. Do you think has the adoption been there? Do you think embedded finance has been a success to date?
It's a very good question. Actually in the Web Summit we opened the, the same topic with a question whether embedded finance was a flop. And I think in some aspects it wasn't that successful. And there are some examples, for example, like with Buy Now, Pay Later, where the service was very needed and it really catered for the consumer wish and need. But it was not regulated properly, right? So then ultimately it creates economical issues. It creates, debt for the consumer. So there are certainly examples of the embedded finance where it wasn't completely thought through, I would say. I would not say that it is a complete flop. And the continuation of the embedding, financial services, in non-financial, environment will continue because there's a huge demand from the user, right? So this seamless experience, where you don't think about, how that happens, it will continue. But looking into sort of the failures and things, that they were not working out, it comes purely for the fact that if a financial service is not really regulated properly, if it's not looked at properly, it creates issues. So the consumer ultimately at the end of the day has to be safeguarded. Another good example as well of embedded finance is open banking. So open banking as a concept is a great concept. It has huge, cases as well that, that is still actually unrealized and it has really a big potential. But one of the first sort of more popular open banking parts was PIS and IAS, which is payment initiation and account information-based services combined together. So basically just making payments. And again, it's great. It sort of gained, quite a lot of traction. There's coverage, from the banks, from the open, APIs. But the problem is that there's no refunds. There's no protection for the end, consumer. So we're talking, if you compare it to methods and payment methods, that have been out there, for a very long time, and they have ultimately in the whole chain of the payment flow, the client and the merchant and the end user is completely protected, and the open banking in this case, that was also not completely thought through. And on the panel, before we were talking with Pedro that, from PayHawk, that UK is kind of very, very good with this, and they're identifying, okay, it's an issue. Let's look at it. But I think ultimately what happens is that, the inherent wish, to innovate and to do things, in that space is faster. And all of the other aspects are not catching up fast enough. So whether it would be, technology, maybe in some cases not completely, supporting, or in this case, in the Buy Now, Pay Later cases, for example, is the regulation part, right? So the regulator was not fast enough to provide support for those companies and actually also to protect, the consumer.
Two follow-up points. So another interesting example of kind of when embedded finance has been a failure was, so in Nigeria, there was a partnership between Uber and an alternative financing, vehicle financing. So a lot of the Uber drivers were taking out car loans through the Uber platform, and the price of petrol basically skyrocketed in Nigeria, and a lot of these drivers were unable to pay the monthly payments, and they got their cars impounded. Oh, wow. So something that was meant to, help them boost their livelihood ended up hurting and taking away, their livelihood. So,
but it's kind of the same with Buy Now, Pay Later. So imagine that, also in this, very digital, times and digital, space where where we're bombarded, with things, to buy, things, services, to use, and you have a very different, generations in general who utilize, the service and consume the services in a very, different way. If you take someone, like millennials, maybe we have more responsibility in terms of, how we consume, certain products. If you take someone younger, they don't have that inherent, threats or basically kind of, so what happens is that, you're presented with a service that you're not supposed to consume because you're a 19-year-old buying an iPhone with, installments that you will not be able to pay for. So ultimately, it's kind of, in that comfort side where we really want to be to have the seamless, comforting, experience, we need to not to forget, who's behind at the receiving, end, and to make sure that it's doesn't create any economical, issues, afterwards for the economy itself.
Yeah, absolutely. I mean, I feel like it's tempting to get caught up in the hype and look to make an embedded finance play, and you probably have a really good salesperson from a BaaS or an embedded finance company, and then it's like, okay, so now what? Like, how does this fit within our ecosystem, and how do we actually roll this out in a way where it's meaningful and valuable for our customers, right?
Exactly. So it's a very important point that you mentioned. It's the added value, right? So, but the added value should not come in an expense of anything else, right?
Absolutely.
And I have to say that I think the biggest progression for me from embedded finance side, that the value proposition has increased. Because if you look at the examples of the embedded finance, from way back when, let's give a typical example of the card issuance. The card issuance is part of an embedded product. I mean, that's been here for, for years. But the reason why it was done, by banks is to just create another revenue stream, and also this is how it was sold, to let's say large, retailers, oh, you're going to have a credit card, you're going to get, ultimately, some cash back, and very big in the US, obviously, because that's all, that's how it's built. Ultimately, did it really have added value to the end consumer apart from those, like maybe some points and whatever else? It was not that great. So where we're looking now is that the added value service, if you take, for example, a very good example is Shopify Capital. So Shopify Capital, so Shopify is an e-commerce platform which has thousands of merchants, and they have their own payment engine also inside. And Shopify can predict and tell and also finance their small merchants or sellers basically on the platform, right? So it's a great example of how it works, and it really adds value because there's small business owners who would maybe not be able to develop or to grow, their business, but they have a chance to do so because, they're provided by the way, a very calculated and very data-driven, proposal to use or to finance, their services. So there are really examples, that really work very well, and they create value. They create value to the ecosystem and to the to ultimately to the all of the parties, because the shop, can grow, they can sell, more goods. It's good basically for everyone, around, and plus they can grow their business in a way that normally these type of businesses would never be able to get financial assistance, right?
Exactly,
So you're combining that, and you're saying, okay, this is I love that example because it's a really good example. So the good examples really exist, and it really adds value. And if you look at, for example, at Uber, also a very great example, Uber Wallet. So it combines all of the parties from the marketplace in one place where there's a seamless integration of the payment flow where all parties are easily interacting. And also what it allows the driver to receive the funds very fast. They don't have to wait for a week or maybe longer until it gets into their bank account. They have something that is also, I think it was in collaboration with MasterCard, so they issued a card as well for it. So it's really the excess of the funds for the party that actually really requires it. Sorry, I can run on the rampage here.
No, I think Shopify is one of the best examples of embedded finance. And I'm not sure if it's changed, but I know that with Shopify Capital, the merchants couldn't apply for it, so it was proactively pushed.
Correct.
By, yeah.
It's completely data-driven. So basically what Shopify does, they monitor the sales of the sellers, and they also see, the metrics of, whether the goods were delivered, there is no chargebacks, so they have, you can say AI also engine, but it's kind of machine learning engine to determine which, for example, merchants, are applicable, and for which, of those, to offer, this kind of service. And it's this kind of, suggestion and this kind of, sale is a very targeted one. So they also do it because they will minimize their risk of failure, right?
Yep,
so non-repayment, this is what they hedge against because they have the data.
Yeah, and I think going to the Uber example, the Lyft card and everything, I think there'll be a lot of success in embedded finance when you can mitigate the length it takes for a payout, right? So I know that, for example, influencers on YouTube, sometimes it takes like 45 days before they can get a payout. So I mean, that's just ripe for an embedded accounts, payments, wallet type play.
So I always group all of this, the influencers, all of this car riding shares, all of this is technically a marketplace, so where there's more than one participant, right? So all of the marketplace businesses require, because the money in is the easy part, right? The collection of the funds is pretty fast, and it's is developed really well. The payout part is still very difficult, because imagine, so even if the service is provided in Europe and the consumers are in Europe, but ultimately let's say in case of its let's say influencers, right, who provide the service or content, they can be located in Venezuela, in Latin America somewhere, maybe in Asia, right? So to get all of that, across, that's why there's so much discussion also, how do you make the cross-border payments, borderless? How do you make them faster? How do you make them, instant? So there's a lot of focus. So the industry grew, in that, direction, and it's a great, thing, for overall, value chain. But we need to make sure, as also the payment service providers, that we know how to resolve, those issues for these industries.
Yeah. So kind of, this is again, I think, a nice segue to the next question about, excellent job, about payments. So what was the most exciting thing you saw from a payments perspective in 2023, and what does 2024 and beyond look like?
Okay, so I mean, I will have to say that the use cases of embedded finance for me were probably the most exciting ones. I will be very boring in that sense, and kind of maybe, as I said before, a little controversial, is that I've been in the payments industry for, for 16, 17 years. I've seen all of the things. There's not something so completely new. It's the way that it's utilized, the way that it's combined, the way that, the different participants, consume, that, particular service. So for me, what I'm liking and what I'm seeing is this more collaboration of different, payment options as well, and this interoperability. Let's say, you're accepting, payments with cards, but, you're doing a payout, for example, for alternative payment methods, or whether it would be, a bank through a net banking, API. So for me, this is the most exciting thing, I think, which in the last year was really evident that this is the way forward. So even from the payment service perspective, that you cannot just be an acquirer, you cannot just process Visa and MasterCard, because ultimately that has a certain shelf life, or then ultimately you're not providing service to all of the clients that that you want to service. So I think for me that was the most exciting thing, this ultimate collaboration between also banks and and non-bank financial institutions, which kind of, I think it's almost already, clear the direction that it's going, that, okay, banks are to stay, they're to stay, for a certain, type of provision of services. And then there's a challenger, institutions like ourselves and others, who collaborate. So I saw really a lot of more collaboration in this, in the space. And really, I'm super happy to see, so many, great use cases that really add value to the end consumer and to the businesses alike.
Super. And so we kind of started talking about Cyprus, being born in Cyprus. So I'd like to finish on a note about Cyprus. Can you tell us a bit more about the Tech Island initiative, and why should fintechs and companies consider setting up in Cyprus?
Sure, I mean that I'm sure we would need way more time for that. So Tech Island is a non-profit organization educating and helping tech companies in Cyprus, also to attract and also to help set up. And as part of the organization, as myself as a business, here, in Cyprus, we do really see a great potential for Cyprus to be a tech hub. It is already parts of it, and we're doing a lot of work, to make it, even more attractive. And we hope that more businesses will relocate to Cyprus and set up shop here. Of course, there's a lot of specific incentives also, but if anyone wants to know, I'm more than happy also to direct them in the right direction to speak.
And I think the weather is definitely a nice incentive.
Look, everyone says about the weather, but I have to say that I'm biased because I'm terrible with whenever I go anywhere else. So. But sometimes, people say, weather is not the only thing, that matters, and it's true because for the business, think about a lot of things. I mentioned, language is a very key factor. Everyone, speaks English. So, and the environment itself for setting up a business is, is really favorable, right? So, if someone is relocating, there's definitely, benefits, but you have to really define what your objectives are. And if you're really just looking for better weather, then it's very simple. It's Cyprus.
Fantastic. Ugnė, thank you so much.
Thank you so much for having me.